Hello and welcome to Focus, a program produced by the Department of Disaster Management. I'm your host, Information and Education Manager Philomena Robertson. And in this edition, we focus on preparing for a rainy day. The Virgin Islands and other Caribbean neighbors are faced with a number of natural hazards, and probably the one with which we are most familiar is hurricanes. In fact, the disaster management program in the BVI evolved from what was initially a rudimentary hurricane plan to what is now espoused today as an all-hazard, all-agency, comprehensive disaster management approach. Nevertheless, it is important at this time of year to highlight this specific hazard. The Atlantic hurricane season runs from June 1st to November 30th. It is the period of the year when hurricanes usually form in the Atlantic Ocean. Hurricanes or tropical cyclones are by definition rotating, organized systems of clouds and thunderstorms that originate over tropical or subtropical waters, and they can impact the territory in many forms, including storm surge, heavy rainfall, coastal and inland flooding, and high winds. In its pursuit of comprehensive disaster management, the Department of Disaster Management places great emphasis on creating partnerships. One such partnership has been established with the Financial Services Commission, the FSC, Financial Literacy Program, which is branded as Money Matters BVI. For the 2014 hurricane season, the DDM and Money Matters BVI has undertaken a joint awareness campaign that is aptly titled Rainy Day, and which has as its theme, Be Ready, Start Early, Start Now. It seeks to promote hazard awareness and knowledge, particularly related to responsible financial management practices to help minimize the impact of disasters. Much emphasis has been placed over the years on the structural changes that we need to make to our homes and the surroundings, such as the installation of hurricane shutters, trimming trees, clearing debris from drains, and ensuring that we have a disaster kit. However, given the current financial climate, it has become imperative that we operate with some measure of prudence. It is one of the basic premises on which Money Matters BVI operates, as it seeks to provide guidance to BVI residents on the basics of finance and how to manage money well. I have with me today Ms. Khaya Dawood of Money Matters BVI, and we will be talking more about preparing for a rainy day. Ms. Dawood, how does one prepare financially for a rainy day?
Exactly how one prepares for a rainy day is ultimately an individual decision. It will be dependent on their financial situation, their expenses, their income, all of that stuff. There's no exact blueprint or one-size-fits-all approach to planning for a rainy day. However, planning for a rainy day incorporates things such as saving and making sure that you secure your financial assets by means of insurance.
Now, I'm sure you've heard the argument, but I barely make enough money to survive. I can barely pay my rent, can barely pay for my car, buy food, put groceries in the house, that kind of thing. But how would you counter that argument and tell people that you really need to prepare for emergencies?
Saving money might be difficult, but it's not impossible. If somebody says they don't have enough money to save for a rainy day, I would urge them to reevaluate their financial situation. Oftentimes people don't save not because they can't, but because they think they can't. You know, whether it's $100, whether it's $20, you know, looking at your budget, looking at your money, you can figure out how much money you're able to spend. What matters most is the consistency and not the amount. Taken for example, if you can only afford to save $20 a month, you know, if you save $20 a month, at the end of the year, you're going to have about $240. And over a period of 5 years, you already have $1,200 banked, you know? So even if it's a little bit of money, over time, it adds up. And especially if you save it in, say, a savings account, it can earn interest to even add to that amount. So I would say that saving, as I said before, it may be difficult depending on your financial situation, but with a little re-evaluation, you may figure out that there is money to be saved.
So it's really not an option, it's just something that we should do. Okay, one of the watch phrases is prudent spending. Can you elaborate a bit on this and also explain how persons can be prudent in their spending?
Prudent spending, also known as spending wisely, that's where you determine what your wants are versus your needs. Oftentimes you'll see people say they don't have enough money, but then if you take a look at how they're spending their money, a lot of things that they consider to be needs are actually wants. Let's think about the newest iPhone. Is it a want or a need? I know for me, I don't do iPhones, so it's not a need, but some people may say it's a need. But you have to figure out what needs are versus wants, and then based on that, you need to be spending your money on the things that you need. Ultimately, what should be happening is that you're supposed to be making more money than you spend. So by the end of the month, you need to know if you have more month at the end of your money, more expenses, or more money at the end of your month. And you should always be striving towards having more money at the end of your month.
Okay, so having more money or having more month.
Exactly.
Interesting. Budgeting is particularly important. Can you underscore for the audience the significance of this and maybe provide some tips on how to develop a budget and also stick to that budget?
A budget is simply a plan on how you intend to spend your money. What happens with budgeting is that you'll see what your expenses are, you'll see what you're spending your money on, you'll see how much money you have or how much money you don't have. One thing that budgets or creating a budget does, it allows you to see how you're spending your money, to track that, to track how you're spending that money. It allows you to see where you can save money. One way to go about creating a budget is by maybe for a month, you list all the items that you spend money on, whether it's a chewing gum, whether it's on rent. Every time you spend money, you want to list it, and not just a mental list of it, but taking notes, written notes of it. Then when the end of the month comes, you look at that list, you look at the money, the income that you bring in, and you determine how much money you're really spending. In doing that, you'll be able to see where you can cut back, where you can find money to save. So after you're finished tracking your money and you're seeing how you're spending money, then you'll know how much money you're spending on things like rent, which are fixed expenses, versus entertainment, going to the movies, going out to dinner, which is known as they're flexible for the most part. So you want to list all the things that you spend money on. Then you want to figure out how much money you want to put every month towards these different things. And you want to make that, put it in your budget, and make sure you're sticking to your budget. One thing that people should know about a budget is that it should be flexible. So don't feel that if you had, say, $100 put towards maybe car repairs this month and you ended up spending $150, that it's the end of the world. That's why you should always be checking your budget. You should always be reevaluating your spending and ensuring that the money that you set aside, or the amount that you set aside for each aspect of your budget, that it's accurate. And on Money Matters BVI, there's actually a sample of a budget sheet that people can find if they want to attempt to create a budget if they haven't done so before.
Excellent. Now, I think it's important to get children involved in this whole process. It is important to teach them at a very young age about financial lessons so that when they grow into adults, like we are now, they would make budgets and stick to them.
Yes.
What would you say about the importance of having children involved in this?
It is very important to have kids involved in the financial planning, the finances in the household. Financial literacy, which Money Matters speaks to, it's not an adult thing. It relates to everybody, young through old. And whether you want to believe it or not, kids are learning about money, whether it's on the television, whether it's from their friends. They're learning about money. They want to spend money. And if you involve them in the process from a very young age, give them some agency, knowing what it means to budget, knowing what the family budget looks like, then you're instilling in them, prudent practices so that as they get older, they can apply them to their own life. I mean, I know personally I don't have any kids, but I can vividly remember as a kid, as I grew older, I try to figure out, say for example, how I learned to use ATM machines. And then I think back and I'm like, from the time I was like 10, 11, my mom used to let me take out money for her. I was involved in her financial process and I didn't even know it. But being involved, her involving me in that process has taught me things that I've needed to know now that I'm an adult to apply to my own life.
Right. So it starts from very young.
It starts from very young. What I would suggest to parents is maybe, as I said, talking more about money in the household to your kids, involving them in the whole process of budgeting so that they know where the money is supposed to go. When they ask for the most expensive item out there, if they have a better idea of where the money is going on a regular basis, maybe they wouldn't be so quick to ask for those things, And simple things like going grocery shopping as well. It allows you to see how money is exchanged, the value of products.
Okay, good. Now, you have been educating the BVI population, Money Matters BVI that is, on financial prudence, and that has been going on for quite some time. What sort of reception have you gotten to your delivery of that message?
Well, Money Matters BVI is a part of the Financial Services Commission's financial literacy program. It was established in 2011, and since that time we have our website, www.moneymattersbvi.org, which serves as a clearinghouse of unbiased information for the general public on all aspects of finance. We've been out in the community, we've given presentations at workplaces, we have been giving out brochures, we create physical documents for people to peruse. What we advise people or what we tell people is that Money Matters is not necessarily giving you financial information or financial advice, but more so we're giving you the knowledge that you need to empower you to make financial decisions that are positive ultimately for your financial well-being. So the reception from the community is that once we come back from presentations, when we interact with persons, they're like, we wish this was available. We knew about this earlier. People want this information, and we seek to, come up with campaigns and programs while partnering with network organizations throughout the community who are experts in their respective fields as it relates to finances to get the message out there.
Okay. Thank you very much, Ms. Doward. In the second part of Focus, we will be speaking to representatives from the Insurance Association of the BVI. Stay tuned. Focus will be right back.
It has all the makings of a major disaster. Torrential rain and winds of more than 300 kilometers per hour.
Disasters can happen at any time.
Are you financially prepared to deal with the repercussions?
Don't allow disaster to creep up on you without being financially prepared.
Put aside a few dollars each month for a rainy day. Everyone should have an emergency fund.
Careful, don't use your rainy day fund for shopping sprees.
Keep it, just in case of emergencies.
Consistent savings of any amount adds up. Start saving today.
This message is brought to you by
the Financial Education Network,
the Department of Disaster Management,
the Department of Information and Public Relations,
and Money Matters BVI, seeking to create a more financially literate BVI.
Welcome back to Focus. In this edition, we're focusing on preparing for a rainy day. Another aspect of preparing for a rainy day and being ready is ensuring adequate insurance coverage. I am joined now by Ms. Antoinette Morgan and Ruth Phillips. Ms. Morgan is the Vice President and Ms. Phillips the Public Relations Officer of the Insurance Association of the BVI. Insurance coverage is important, but when we consider potential damage from hurricanes and other natural and man-made hazards, its significance is even more magnified. Underscore for viewers the importance now of having adequate insurance coverage.
Okay. long question. So let's break it up a little. The first thing is let's talk about insurance and what insurance is all about. Insurance is actually about risk transfer, where you, the insurer customer, transfers the risk from yourself to an insurer. Okay? We face many risks every day. We face the possibility of death. We may get ill. We may have an accident on the road, or our houses may just burn. Now, the second part of the question is about adequate insurance. Adequate insurance is how able you are to remove the risk from yourself and to place it with the insurer. Now, the mistake that most people make, like if they insure a house, is to insure only a portion of the house with the insurer. So say your house is worth $1 million, and for whatever reason, you want to insure it for $500,000. It means that automatically you're placing a half of the risk with yourself. Okay? So if and when there is some kind of catastrophe or a claim, what happens is that the insurer will ask the question, whose half of the house was damaged? Okay? I'm using a simple example so that you may understand what I'm saying. 1 million is the actual value. You insure it for $500,000, which means that you automatically are placing half with yourself. All right? If something happens and say you have damage of $100,000, you are going to only get $50,000 because you only placed the half with the insurer. So you will be out of pocket by about $50,000.
Okay, so
the key is, once you have a building or a property, it makes sense to insure it for full value. Most persons want to insure it only for what they owe the bank, which is a mistake. Because at the time of the loss, maybe you won't even be able to recover what you need to pay the bank.
Very good point there, Ms. Morgan. So what are some of the things to be considered for persons who don't yet have a policy?
I can relate to an example. The flash floods which took place last year in St. Lucia. We realized that a lot of persons were penniless. The floods, landslides also took effect and destroyed a lot of homes. Not only did the landslides take effect, but also the flooding. Business places, they were interrupted. And that is one major concern that we need to look at and prepare ourselves. Another thing also, unexpected medical expenses. For example, if you go to a hospital, are you ready to pay the bill? That is posed, are you ready? You know insurance assists, health insurance particularly assists in minimizing the expenses. And also, it is worth it. Also, mortgage protection. If you're preparing to build a house and you go to a financial institution, example a bank, for a loan on a building, what happens then? If something should happen, for example, a fire, if you're uninsured, what happens to you? These are the very serious questions we need to ask ourselves when we're thinking about insurance. Also, finally, cost. The cost to replace or to rebuild. So I think persons should consider taking the policy out because of those unexpected occurrences or factors.
Okay, very good. Now, if persons already have insurance coverage, how can they determine whether or not that coverage is in fact adequate?
I would advise the individual to refer most importantly to the policy. There they will have an understanding or general idea of what they're covered for. If they don't yet understand the terms of the policy, they should go to the insurance representative or the insurance provider who will give them a clear understanding of the policy terms, conditions, exclusions. But then also, I also have a few tips for those persons. Always review your insurance documents firsthand. Make sure you have the adequate sums insured for insurance. So obtain from a chartered surveyor at least the cost of the property. That will give a general idea as to what your building is worth.
Okay. Would persons be required to make structural adjustments to their properties to get insurance coverage?
Not necessarily. At the beginning of a contract, we usually request an appraisal or evaluation. Or sometimes we actually go and do an inspection on site for ourselves. Now, if the appraisal comes to us showing us that there is some kind of damage, then we might make recommendations. We can even decide not to insure the property depending on the severity of the damage, right? But as long as there's nothing, then no, we don't usually do that.
Okay. Are there different types of insurance, property insurance?
Yes, there are. There are contents insurance, there are builders and contractors all risk insurance, and there are also property insurance. Now, property insurance covers two aspects of it. It covers the businesses for his business assets, and it also covers the homeowners for the property and the contents. Also, for contents insurance, we have renters or persons renting properties. They may not own the building, but also the contents belong to them. So it is advisable that they also get protection coverage for the contents.
Is insurance mandatory for homeowners? And if it isn't, do you think it should be?
Insurance is not mandatory for homeowners at all. The policies that are mandatory are those like motor insurance is mandatory worldwide. And why that is so is because it affects other persons, other road users. All right? So you might be operating a vehicle on the road and you might operate it recklessly, right? Not only will you may you not be able to pay the expenses out of your pocket, right? And if you don't do that, it will affect somebody else, all right? Because consider yourself walking on the road and you're bounced down by a vehicle, right? You might need to be flown out of here, depending on the severity of your injury, all right? And if I did not have insurance, I don't know how you're going to get help, all right? So for motor insurance, that's mandatory because it affects other road users. In the United States, I know of employer's liability that too is mandatory because if you have a company and you have employees, then you are liable to your employees if they get injured on the job. For homeowners insurance, if something happens on my property, it might not affect you, okay? And it's my loss, so it affects only me, right? So apart from the banks who stipulate that you get insurance coverage, if you're getting a loan from them, insurance is not mandatory for homes, and I don't believe it ever will be.
Okay, but I mean, with a home, if something happens on a specific property, it can in fact affect other people. We had an incident not too long ago where a retaining wall collapsed and it has blocked the access road, affecting other persons from having access to their property.
You have instances as well where a fire might start on my premises and it might spread to the whole community. It can happen, okay? But because I believe the statistics show that it doesn't always happen like that, and I would be the only person who loses if I don't insure my property, then I don't believe we'll ever see that in this lifetime, where it's mandatory.
Okay.
Because if I don't owe the bank, I might choose not to. It's my loss, you know, and I might be a gambler.
That's a hefty gamble there.
Exactly.
But how affordable is insurance?
Okay.
It's $1 million question,
yeah,
right?
It is. Because affordability is relative. Okay. There are so many things that I would believe I cannot afford. Example, insurance. You know, I have insurance policies, and sometimes I really think, do I really want to pay these? You know, I'd prefer to buy shoes. I'd prefer to buy clothes. But what if something happens? And let's just use medical insurance, for example. Just 3 years ago, I had to have emergency surgery. If I did not have medical insurance, I don't know how that bill would have been paid. Even up to now, I don't know. Okay? So even though at the time I would have preferred to not have to pay this at the end of every month, you know, and to keep it and to do whatever I want to do with it, it helped me in the long run, right? And for homeowners, we find that persons might pay for a policy over 20 years. Nothing ever happens. And they say, you know, well, we're not getting any benefit. We're paying all this money every year. Now, say your premium is $2,000 per month, all right? And you've been, not per month, sorry, per annum. And you've paid for 20 years. That's $40,000. And you'd have loved to have that in your pocket. But say year 21, you decide not to insure and something happens. Then we have a problem. We definitely have a problem. Furthermore, the loss that you may incur might be $400,000. You only paid in $40,000 over the years. So it makes sense in the long run. So I believe the real question is, can we not afford to have insurance because things happen. And most times we only find out at the time of the loss what we should or should not have done. You know, we'd say, boy, I wish I had paid that extra, you know, to be protected.
Right. So having insurance is definitely a means of being prepared for any eventuality. Now, some may argue that they don't own a home, so insurance is not really necessary. They rent, so it doesn't matter. But Ms. Phillips, you made mention earlier that there is something known as contents insurance. So how would you sell this idea to persons who seem not to think that insurance is important if they don't own a home?
As mentioned earlier, contents insurance basically covers for home contents and personal possessions which have been damaged, destroyed or stolen. For renters, if contents insurance is not included in the lease agreement, then the individual would basically have to seek their own insurance on the contents. Again, it would be imperative that the sums insured of those contents are determined by the individual and making an approximate inventory in the household and taken to the insurance company, and they can get that covered. It will not affect the property itself, but just the contents in the property. Also, there are some lease contracts which don't incorporate the fixtures and the fixtures and the fittings, and persons may be responsible, for example, replace if they damage a sink or maybe some expensive fitting in the apartment. They may also need to include that under the contents insurance as well.
Well, what I would like to add to that is most times, you know, if somebody comes into the same thing, right, because this is what I do, and they have a house that they want to insure, you know, most times if you ask them, would you like to insure the contents? They'll say, no, that's okay, I only owe the bank for the house. But what happens most times in a disaster is that the contents would go faster. Okay, if you have a building and say you have zinc roof, okay, the roof might go. The rain will then damage your furniture, okay? If you have a fire, it is hardly likely that the outside of the house will go because it's mostly block and steel. But the things inside of the house will burn, so those things are more susceptible to damage than, you know, the building itself. Right. So it is always important because we all have things that we treasure, you know, or little things. Sometimes if they get lost, you might not be able to replace them because some things you probably got it from your grandmother, but at least you will get the money value for it. So renter's insurance, very important.
Okay. Now, in the event that someone is affected by a hazard, their property is damaged, what are the steps that they need to take to secure compensation from the insurance? How do they go about doing that?
The individual should first and foremost secure their possessions and their property as a first step. Also, take photographs. You know, we're in a mobile digital world these days where technology is an advanced scale. So take pictures, take photographs of the damaged property, so at least you have proof and evidence that it was actually stolen. Notify your insurance provider immediately. Don't wait a few days after when everything changes and the nature of the consequence of the damage deteriorates or whatever. Also, carry out any immediate repairs if need be. For example, if there was a landslide and part of the property is exposed, that you want to secure the part of the property is not affected. So basically you take evasive measures right there on instant. So that is another step for me as well. Also, original receipts and estimates, cost estimates. Make sure you have it at hand, or if you do have your receipts from your when you made the purchases, keep that at hand in a secured place. So when you go to the insurance company, you have something to show that this item was purchased at whatever price, at whatever date, at least to show proof of purchase.
Ms. Morgan, there is some discussion that's ongoing in the BVI about the possibility of establishing microinsurance. Now, first of all, can you explain the concept, the microinsurance concept, and what is your perception of this? Is it something that's worthwhile?
Okay, I believe it's a great idea. In its simplest form, microinsurance caters to lower income earners. That's the study that went underway. They included farmers, fisherfolk, small business owners, and persons within households that were earning less than $15,000 per year. Okay, Now, this is the principle upon which insurance was established, being persons facing common risks, they all pooled their money together. And when something went wrong, then they would benefit from it, right? So it's basically the same thing. I would, however, hasten to say, though, that what is important in getting this microinsurance on the way is the size of the pool. That's important. The commitment of the persons who are contributing to the pool is also important, because if persons just keep backing out for whatever reason, or say, well, I can't afford it after it has been established, it will cause problems. And lastly, the administration of the insurance itself. You know, who is going to do it and how it will be done.
But it's an idea that you support.
Yes, I do. I actually do, because I mean, things happen, and in the BVI we see that we have. I mean, just over the weekend we had a lot of rain. And I'm sure that a lot of persons were affected. And most times the persons who are affected are those persons who did not have insurance for whatever reason. And most times, I can't afford it. That's the
argument.
Yeah, the argument.
Thank you very much, ladies, and to our audience. I'm sure that you would have gleaned some very useful information in terms of getting prepared and ensuring that you have adequate insurance coverage. That brings us to the end of this edition of Focus. I am Philomena Robertson, the Information and Education Manager at the Department of Disaster Management. Until next time, be ready, start early, start now.
It has all the makings of a major disaster. Torrential rain and winds of more than 300 kilometers per hour.
Disasters can happen at any time.
Are you financially prepared to deal with the repercussions?
Don't allow disaster to creep upon you without being financially prepared.
Put aside a few dollars each month for a rainy day. Everyone should have an emergency fund.
Careful, don't use your rainy day fund for shopping sprees.
Keep it, just in case of emergencies.
Consistent savings of any amount adds up. Start saving today.
This message is brought to you by
The Financial Education Network,
the Department of Disaster Management,
The Department of Information and Public Relations,
and Money Matters BVI, seeking to create a more financially literate BVI.